Hi everybody, Happy New Year. Welcome to the Wall Street Journal Report. I'm Maria Bartiromo. Christmas miracle or lump of coal? The fiscal cliff, the deadline, and what it means. We'll look ahead, we'll look back, our all-star panel on the big news that hasn't happened yet, a preview of the big stories and trends for 2013. And then we'll hit the highlight reel, my interviews with the most important, influential, and interesting people of the past year. The Wall Street Journal Report begins right now.
This is America's #1 financial news program, The Wall Street Journal Report. Now, Maria Bartiromo.
All that ahead, but first, here's Bill Griffith with a look at some of the stories making headlines this week. Bill, over to you.
Thanks, Maria. Here's a look at what's making news as we head into a new week and a new year on Wall Street. Congress is working the weekend, attempting to avert some part of that $600 billion in automatic tax increases and spending cuts that are set to kick in on January 1st. That fiscal cliff and its potential impact on our economy brought lawmakers from both houses to Washington for last-minute negotiations. Concerns about the cliff spooked investors. The holiday-shortened trading week was lighter in volume but higher in volatility. The Dow flirted with its worst decline of the month on Thursday after a disappointing read on consumer confidence and some public statements by congressional leaders. And yet, with one final trading day to go, all the major averages were still showing positive performance for the year of 2012. Meantime, the U.S. is set to reach its debt limit of $16.4 trillion on Monday. That, according to Treasury Secretary Tim Geithner. In a letter to Congress, though, he did say that he expects to take what he called extraordinary measures to extend the government's borrowing ability for another 2 months or so. And even your cup of coffee wants a deal on the fiscal cliff. Baristas at the 120 Starbucks in Washington, D.C. were encouraged by management to add a shot of bipartisanship to their drink orders and remind customers in our nation's capital to come together. Wall Street is typically quieter this time of year, but of course this last week of 2012 was marked by investor concerns over Congress's New Year's Eve plans and that looming fiscal cliff. So what impact does it have on your money? Allison Deans is with us. She's senior advisor at Varick Asset Management. It's nice to see you. Happy New Year. Do you have two plans for 2013, one that includes the fiscal cliff and one that doesn't include it? Or how do you prepare for the new year as an investor?
Pretty much. I mean, the outcome, if there is some type of healthy resolution to the fiscal cliff, even if they defer it for a week or two but come up with some healthy resolution, I think it bodes really well for global markets. If we wind up going into the fiscal cliff and the world loses any faith in our government to accomplish anything that's helpful or relevant, I think that could impact the markets and it could impact the economy.
Well, there has to be a long-term impact, though. I mean, let's face it, any deal that they can come up with is an austerity deal. It will involve some form of tax increases, you would think, and some kind of spending cuts on the economy. That slows things down. It's not a growth initiative necessarily.
It's not a growth initiative, although my sense is most of it, while there'll be cutbacks in government and there will be some higher tax rates in some aspects of the market, if it's just taking back some of the lower tax rates that were put in place during the Bush era, the impact those lower tax rates had on the economy was minimal. So my sense is the impact it will have on the economy if the tax rates are higher will be minimal. But if it's something more draconian, that's where you could have a negative. But the offset to any reduction coming from government spending and healthy government deleveraging is once the uncertainty's gone, it should give people as well as companies greater confidence in making longer-term plans for spending and for growth.
Where do you think we'll see evidence of it initially? I mean, there's all kinds of stories out there right now. We'll see the cost of milk doubling maybe, all those kinds of things. Where do you think we will see it, and what impact does that have on the consumer and or investor, do you think?
My sense is you're going to see it by a lot of the government help being pulled away, people seeing fewer benefits, a reduction in their paychecks, and there could be a bit of a reduction in overall consumer spending, consumer behavior. The positive side will be that we think corporations might start reinvesting in their businesses. And I think the long run health of our economy is to not be so reliant on just consumer spending anyway. So if the consumers pull back a little bit, but the offset is corporations start reinvesting in infrastructure and in their businesses, that's a real plus.
Do you think that the CEOs will turn the spigot on and start spending more and hiring more? I mean, we've heard so many CEOs come through who say they are just waiting to see what happens with the fiscal cliff. But by the same token, though, does that necessarily mean that suddenly we have more capital expenditures in the economy for next year?
I think there are a few reasons why we will. One, global growth. China appears to be stabilizing and growing, and the rest of the emerging markets are growing. So there's more demand for export business. Number two, corporations are sitting on $1.5 trillion of cash. So they have a lot of cash. They just need to know how and which way they should spend it based on overall tax policy. And, number three, if you look at equipment and plant and equipment in America today, the inventory is incredibly old and due for reinvestment and upgrades and modernization. So there's a lot of pent-up demand for investment spending.
There have been a few bright spots in our economy anyway. I think of housing, which has been in recovery mode right now. Does that continue in 2013, even if we do see some sort of resolution of the fiscal cliff, and what that could do to paychecks and jobs in the economy?
The offset is that people look at the values of their houses and start feeling better. I mean, 1/3 of household wealth is the value of their house. And if they start seeing prices stabilize and appreciating, that could offset some pullback in overall consumer spending.
Where will we make money then, do you think?
My sense is emerging markets is where you're going to have a lot of the growth. And those markets have been depressed for a couple of years. So equities in the emerging markets, equities in the U.S., I'd probably keep clear of Europe for now because I don't think they're going to have very much growth. I think high yield debt and emerging market debt are other areas that will be very interesting. Within equities, if the economy starts really growing, it'll be more broad-based, and people can move away from the more conservative investments, go into more cyclical as well as mid and smaller cap stocks.
An optimistic view on 2013 from Allison Dean. It's always good to see you. Happy
You
New
too.
Year.
Thank you.
And when we return on the Wall Street Journal Report, Maria will be back. Gazing into the crystal ball of 2013, what the new year may bring to Wall Street, to Washington, and to your wallet. Predictions and analysis to get you to January 1st and beyond. And then later, what a ride it's been. Some of the biggest names and stories and ideas that made the 12 months of 2012. And as we go to the break, a look at how the stock market ended the week.
Well, another New Year's Eve approaches, and instead of resolutions, we're making bets and predictions for what's ahead in 2013 for Washington, Wall Street, and around the world. Joining me now is the Washington Post's Ezra Klein and Yahoo Finance senior columnist Mike Santoli. Gentlemen, good to see you. Thanks so much for joining me.
Thank you for having us.
So, Mike, the post-crisis lows for the markets are nearly 4 years old in 2013. What's your outlook for the market stability and the broader economy?
Well, I think the market is finally realizing that it's kind of emerged from this long-term kind of uncertainty trade out there. The big picture questions of whether the central banks could kind of stabilize the system, whether, for example, China last year was going to go into a recession, whether Europe could kind of keep it together through a recession. I think we've kind of gotten past most of those things, and I think a slow and steady U.S. economic growth picture is probably the best bet, but I think it's going to feel better to the average person because of the components of that growth, meaning housing, autos, and finally jobs looking like they're on a decent upswing. So I think a slow and steady, but feeling better than in the past couple of years.
Yeah, it definitely does feel better. Ezra, uncertainty seems to have been the huge theme this year. Businesses don't like it. Investors don't like it. How much uncertainty do you expect in 2013 for the political system and for consumers?
Oh, plenty. The world is an uncertain place. I mean, to Mike's point, I agree. I think the fundamentals both here and globally are looking pretty strong. The problem is we're seeing essentially simultaneous deterioration in political systems across the world. Obviously, Europe has been having a number of problems, but I wouldn't exactly say Washington has been covering itself in glory. So one of the big questions going forward, I think, is whether or not the political system will do enough to, I don't exactly want to say get out of the way, because they have to do enough to help structure recovery, right? We can't have bad policy happening, but whether or not they'll be helping or hindering, they can make the tough times last longer, or with a couple decent decisions, they can really provide some juice to the recovery now.
What do you see as far as the relationship between the president and Congress this year?
It's not been great so far. It'll matter quite a bit whether or not they're able to get a fiscal cliff deal done in the near future. If they are, that to some degree clears the decks to do other things that might not be quite as either controversial, or if they are as controversial, may not matter as much to the economy. So if you have a long fight over immigration, that's not a great thing, but it's better than having a fight that leads to a debt ceiling default. The question then is whether or not they're able to move past this in a way that allows for making agreements going forward, or whether or not we end up in an essentially endless series of smaller fiscal cliffs this year. Things get pushed forward for 2 weeks, 2 months, 3 months at a time, and so then we have another debt ceiling in early 2013. If that's the case, then there's going to be a lot more of this kind of uncertainty, and the structure will be there for a lot more very angry, very tense, very bitter, very 11th hour negotiations going forward.
So, Mike, from an investor standpoint, what sectors or industries are you watching in 2013?
I actually think that what's interesting is that, the housing revival has obviously been embraced by Wall Street. A lot of the direct housing-related stocks have done extremely well, but I think some of the same dynamics, like years of pent-up demand, are at play in the auto sector domestically and globally, and those stocks have not really kind of powered forward the way the housing stocks have. So that's one area. I also think, broadly speaking, the industrial area has really gotten punished over the course of 2012. Even though the overall markets did well, on a relative basis, they did not because of those China fears, because of general slowdown concerns. So I do think that that kind of multinational industrials trade looks okay. And financials, very big surprise outperformer in 2012. In selected areas, I think especially when it comes to places that facilitate corporate deal making, we have to see companies have risk appetites get higher. They have to invest more, probably do more deals. This is the stage of the market cycle and the economic cycle when you start to want CEOs to have the confidence to start going out and growing, whether it's by acquisition or other means.
Ezra, let's talk about the slate for the domestic policy agenda. Walk us through one big event, the rollout of the first tax increases of the Affordable Care Act. Will we see movement on other issues, gun control, energy policy, education?
What sets the Affordable Care Act in a different category than all the others is that it's law. It's all going to be rolling out over the next couple of years. It's very, very unlikely there's going to be significant action in Congress that would be signed by the president to alter it or substantially change it. So you'll see a couple things happening there. One is over the next year, some of the major taxes will roll out, particularly the 3 big taxes they're helping to fund the bill, although not, we should be clear on this, the tax on high-value health insurance plans provided by employers. That won't begin until 2018. You will also see a lot of changes in the actual medical delivery system itself. In particular, a lot of the Affordable Care Act's key reforms for hospitals in terms of how they pay for services, moving away from pay for volume towards pay for quality, are beginning essentially as we speak now. Those are going to roll out over the next year. Come the end of next year, come the end of 2013, we're actually going to see the massive coverage expansion wherein many, many, many people get these tax credits to either get private insurance or they get covered by Medicaid. And we still expect the scale of that expansion by the beginning of 2014 to be in the range of 25 to 30 million people. So that will be a lot of folks. Beyond healthcare, it becomes a lot less certain. Gun control, I expect a significant conversation. It is hard to imagine anything tremendously radical being done given both the composition of Congress, including Republican control, but also including due to how Congress is composed of power of rural areas.
Mike, what's your ideas or predictions for the new year? Any surprises that we should be looking for? What do you think, positive or negative in the year ahead?
I think that there's a chance for one very positive surprise, which would be for a supply-driven decline in energy prices well beyond what the markets are already handicapping. I can't say that that's a 2012 event, but it does seem like the clues are piling up in that direction. That would be tremendously bullish. That's an underappreciated element of the 90s boom, was very cheap energy without being driven by economic weakness. So that's one thing. And then I guess on the potential negative side, I really do think that there's always the chance that the central banks that have they basically have the system in therapy right now, and they think they have the medical dosages right in terms of free money. And if they sort of lose control, whether it's in Europe or somewhere else, I really do think the markets would be unprepared for that if we go down a few months down that road.
Mike, Ezra, good to have you on the program. Thanks so much.
Thank you.
Thank you, Maria.
Have a great new year. Happy New Year, guys. Up next on the Wall Street Journal Report, looking back at the faces, the names, and the ideas that made the year 2012 on our show. We'll bring you the best of the best. And you can find us on Facebook/Maria Bartiromo. Back in a moment. Well, we're at the end of another remarkable year. It's been my privilege to bring you insights on stories as wide-ranging as the presidential election, the fiscal cliff, jobs of the future, and even a few movie stars. We wanted to take a few minutes to highlight the best of 2012. This is the year that was, and thank you for sharing it with me.
I wish that people had more rational conversation to collaborate to how we can make the country grow faster and create jobs and create opportunity.
America's always thinking it's in decline. The declinist books are by people left, right, and center. It's it's almost like a publishing craze, not quite 50 Shades of Grey or as sexy, but still.
Biggest priority for the United States right now is getting recovery going at a rate that is rapid enough to produce sustained reductions in unemployment.
Under current law, on January 1st, 2013, there's going to be a massive fiscal cliff of large spending cuts and tax increases.
Find some way to avoid the fiscal cliff, to avoid doing anything that would contract the economy now.
Does that mean extending the tax cuts?
The real issue is not whether they should be extended for another few months. The real issue is whether the price the Republican House will put on that extension is the permanent extension of the tax cuts.
If you're going to extend the tax cuts, you're going to have $3.8 trillion added in 10 years to the $16 trillion we already owe. I mean, have a drink.
We can't keep giving the middle class tax cuts like the president says he wants to do and Romney says he wants to do when we have $1 trillion deficit.
So just a few days before the election day, and your analysis of the polls has given the president a better than 80% chance of winning re-election.
The fact that the president leads in the polls in Ohio and Iowa, states where he would need to win 270 electoral votes, means that he's the favorite in the Electoral College.
This is the era of reflation, or at least attempted reflation. What Ben Bernanke is doing is basically writing checks, Maria.
Having a lot of cash in the bank is not a bad thing.
So
my friend Steve Jobs kept lots of cash in the bank.
You started brewing Sam Adams beer in your kitchen in 1984. Tell me how that happened. How did you decide that you wanted to brew your own beer in the kitchen?
Well, I come from 6 generations of brewmasters, so beer was kind of in my history, in my blood. About .06, so it was still legal.
The homeless to billionaire?
We believe what we did would work, no matter how bad times were.
In 2020, are we going to be at a much better place? The alternative was not the greatest healthcare system in the world with no problems. The alternative was a healthcare system with a lot of problems.
If you were starting your career today, Secretary Solis, where would you work?
I would want to make sure that I have the skill sets available, and that means soft skills. It means also technical skills. For example, even welding. Did you know that there's a shortage of people that have that skill available right now?
These are the cars that run on Sunday. This is the championship car that Tony Stewart drove.
People start watching movies on phones and probably their watches next year.
Yeah.
You know, I mean,
smaller and smaller.
Do I miss filmmaking? I have to tell you the truth, no. And one of the reasons I've been doing it for a long time, and I've always thought that you get to a certain age, we should change what we do. We should look at life. What are our passions?
Every 20 seconds, a kid somewhere on our planet dies because of lack of access to clean water or sanitation. We probably don't know anybody who's ever even been thirsty. I have to keep reminding myself that this is an everyday reality for a whole lot of people.
For those who don't know, what is a skyhook?
Skyhook is just a hook shot on the basketball court. I put my own little stamp on it, up and over and down. That's it, perfect.
The bigger the risk, the bigger the payoff. When I did Lion King, I had no idea what it cost. No one ever talked to me about money. I found out last year what it cost, and it was much more than I thought, but it's made upward of $6 billion, so no one ever really complained about it.
There are great chefs and there are great business people. You are both.
Being a great businessman, I think it's like in the kitchen. You have to surround yourself with talented people you trust.
What I love about a restaurant, you can't outsource it.
Thank you for coming.
Thank you so much for having us.
Thank you.
Everybody went into the family business. No black sheeps that wanted to go somewhere else.
He wanted a lawyer, he wanted a doctor, and an architect.
That's what I...
And now we all sell soup.
And you got 3 restaurateurs.
I know that some journalists have triggered you to cry.
Oh, no,
Are you trying to change that image?
Oh, no. Listen, I've met every crier in America because they come over to me and they put their arm around me and say, hey, I like you.
My thanks to all the great guests we talked to in 2012. Up next on the Wall Street Journal Report, we'll take a look at the news this upcoming week that will have an impact on your money. And then continuing our look back this weekend, who moved the markets, impacted your economy, or even made you spend differently in 2012. My take on the business person of the year. Stay with us. I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. Now, a look at the stories coming up in the week ahead that may move the markets and impact your money this week. Tuesday is the first day of 2013. Markets will be closed for the New Year's holiday. Wednesday, total auto sales for December will be out. And then on Thursday, the Federal Reserve releases the minutes of the last meeting on the Open Market Committee. Friday, the all-important monthly jobs report will be out. That will tell us how many jobs the economy lost or gained in the month of December, typically a market mover. And I would have to say, for my business person of the year, drum roll please, Ben Bernanke, chairman of the Federal Reserve, who, because he surrounded us with free money and his low interest rate policy, triggered a stock market rally all year long, an economy that, while moving slowly, certainly showed growth throughout the year. Bernanke's policies encouraged lending, it encouraged borrowing, and also told us that there are few alternatives with any returns for our money beyond stocks and housing. For all of that, Ben Bernanke is my pick for Business Person of the Year 2012. That'll do it for us for today. Thank you so much for joining me. Next week, we'll be coming to you with a brand new look and a brand new name. Look for On the Money with Maria Bartiromo. I'll continue to be here for you, as will all of our great guests every week, where Wall Street meets Main Street. Have a great week, everybody. Happy New Year. Wishing you the best of everything in 2013, and I'll see you next weekend.